Now's the time of year to think about what you might consider doing in the lead up to 30th of June. You should review your tax planning options with a qualified tax agent. We usually see the best outcomes if your accountant works together with your financial advisor, because many of these strategies can require both types of advice. If you're an employee, consider salary sacrificing any upcoming bonuses or income into super. These incur a maximum 15% tax rather than your personal tax rate, which could be 2 or 3 times more. If you're self-employed or even a retiree, you might be able to claim a tax deduction on your own contributions that you make into super. This strategy becomes really effective if you've made a capital gain during the year. Also, with the recent federal budget proposals, it's even more important to get advice before you contribute into super in the lead up to the 30th of June. You should review your investments, and those that you don't want to hold can be sold off. If sold at a loss, this might offset other capital gains and reduce your tax. If you're sitting on a gain on an investment that you're wanting to sell, you might actually defer that decision until July so that it moves into the next financial year. Reviewing investment loans and prepaying interest where you can will also give you another way to bring forward tax deductible expenses. Income protection policies are generally tax deductible, and you can pay them annually to receive a discount on your premium. You can review your existing policy or set one up if you're not covered. Many clients also have life insurance under their super funds. This may give you lower cost cover than holding it personally. Usually the financial accounts for self-managed super funds are prepared by now, and we review things to keep things moving in the right direction. 4 areas that are typically covered this time of year are to revise your contributions. In addition to what we've spoken about, self-managed funds have some added contribution strategies that we consider, and also to revise and consider pension strategies, including making sure that your minimum income is paid by the 30th of June. The third area is to revise your investment strategy in light of all the things that can change in a year. Also, considering insurance is a legal requirement for a super fund's investment strategy. The final thing we look at is to revise your death benefit and pension nominations to ensure that you're still comfortable with how this is set up. Hopefully that gives you a few ideas of what might work for you before the end of June approaches. Feel free to contact our office to discuss any of these areas with a Securinvest advisor.